Why am I seeing weakness in bonds, gold, and cryptos? And what about stocks? Even stocks are showing some lack of conviction. So what's happening? Well, first of all, we're coming into August, which this article on MarketWatch says is the worst performing month of the year. Link in the pinned comments below. And you can see it says right here, in the years since 1986. In contrast, August has been the worst month for the stock market, and you can see the statistics here. Or could it be that all the money managers from New York spend August at their summer houses in the Hamptons, so nobody's buying anything? Earlier this month, as you can see here, we had very tame CPI, or Consumer Price Index numbers. These came in great, and then those were followed by very tame Producer Price Index, or PPI numbers, as you can see here the following day. And then this last Friday, yesterday, the core PCE indicators came in a little bit on the soft side. So this is all good news. All of these metrics should help the Fed to decide to finally stop raising interest rates. So shouldn't this be good for the stock market? Let's take a look at what we're seeing now in the metrics. Well, if we look back over this past week, you can see that equities had a very nice, little bit choppy run, but a very nice run here, with ARK finishing first, NASDAQ second, small caps third, S&P 500 fourth, and the Dow last. This is a very, very healthy looking stock market rally over the last week. And over the last month, same picture, and year to date, same picture. What could be better? Where do we go? And if we take a look at the bottom dynamics, these look pretty good. I thought last week that we could see some downward move, but it didn't really happen here. I mean, it happened on Thursday, but this didn't predict that. Well, you can see that the confidence level is going up a lot here, but so is the safety confidence level very high. The market's been on a very nice rally, and the bottom confirmation and bottom forming indicators are kind of going nowhere here. So not really much to see here. What about risk versus opportunity? Well, a little bit of a scare on Thursday. These started to shoot up. The risk, which is the red line, shot up. The risk acceleration really shot up. And the opportunity level has been falling as of late. But you can see after the rally on Friday, both of these risk indicators really dropped here, and they're currently at levels where I don't worry. The risk acceleration was starting to give me a little worry here when it got up to almost 70. This one bothers me when it's above 60. But the risk never really got anywhere close to 80, which is up here, which is where I start to worry. And the opportunity level up here near 80, this is all looking really, really good. And how about equity versus safety? Well, if you've been watching my channel for a long time, you'll know that the NASDAQ 100 has been in first place for, oh my God, 10, 12, 15 weeks, something like that. And then last week, it dropped down here to fifth place. But now this week, it started to recover and it's up here in second place. Now, I like the way this is currently sitting. You've got small caps in NASDAQ 100, number 1 and number 2. These are the riskier equities in this list. And then you've got the Dow and SPY third and fourth. This looks very healthy. Cash is in fifth place. This looks great. Gold has been dropping. It's been going nowhere. You'll see that in other metrics that I'm going to show you. But then we still have an unhealthy treasury market. You can see that the longer duration treasuries, EDV and TLT, are ranked 9 and 10 here. So that's an unhealthy market. You really want it to look more like, where was it? Back here, where you've got EDV, TLT, and then shorter duration treasuries below them. But that's not the case here. This is totally inverted. So not a healthy treasury market.
Hey, I got a confession.
And how does this all show up in the buying and selling pressure? Well, you can see that we've had a very nice rally in the Dow, a big boost in the buying pressure here, but it has since almost collapsed. It's still above the selling pressure though, which is the solid orange line. For the S&P 500, very similar picture, nice rally, buying pressure above the selling pressure and moving higher here at the end. This looks great. For the NASDAQ 100, it's been struggling a little bit as I showed you in equity versus risk, but still a very nice rally here. Still hasn't gone past its previous peak. Hopefully that'll happen soon. But you can see that the selling pressure is above the buying pressure. A little bit of rotation here out of riskier assets into safer assets. So I think some portfolio rebalancing, maybe before they went on vacation so they didn't have to worry. Who knows? But ARK Invest, you can see a similar picture. Nice rally. It's been struggling as of late, and the selling pressure was above the buying pressure, not by a lot, but now the buying pressure on Friday recently moved up just a little bit higher than the selling pressure. So it'll be interesting to see how things go over the next few weeks into August. And if we look at small caps, IWM or the Russell 2000, you can see again, very nice rally here. But the selling pressure is above the buying pressure as of late. Now let's take a look at sector rankings, because these really give you a good read on what's going on in the markets and how different sectors are reacting to what's happening. And if we look at this, last week we had a very healthy looking stock market. We had Bitcoin, a risk asset, ranked number 1. We had technology, semiconductors, consumer discretionary, ARK innovation. I mean, this is great. You couldn't ask for much better than this. Gold down here, consumer staples down here, cash down here, and then you can see that treasuries were in an unhealthy relationship here. So this looked fabulous last week. What about this week, this bottom table? Well, again, Bitcoin, technology, ARK Innovation's now up here, so this looks even healthier. Consumer discretionary slipped a little bit, but so did consumer staples, and cash is still sitting in the same place, and treasuries are still in the same relationship. Well, now let's take a look at sector rank acceleration, because these move a lot quicker. They tell you kind of where things are moving to rather than where they are. And if we look at last week, ARK Innovation ranked number 1. Remember, consumer staples was up here. I said that investors were rotating out of riskier assets and into the safer consumer staples asset class. And this is a normal rotation when you're taking profit from things that have gone up a lot and putting the profit into safer investments, which I think is not a good move. But you can also see that treasuries were starting to look healthier here. We had long duration treasuries above the shorter duration treasuries, and cash way down here at the bottom. This is a very, very good looking risk appetite for equities and for treasuries. But as I'll show you in a minute, that didn't work out for the treasuries. But let's see where we're at this week. So if we look at this week, we've got ARK Innovation up here, emerging markets, this is good. Technology, emerging companies, these are all risk assets, these are good. You can see Bitcoin's dropped way down here. Consumer staples have fallen off, but consumer discretionary fell way off. And again, you can see that treasuries are in somewhat of a healthy relationship here, although I'd like to see the shorter duration intermediate treasuries below these 7 to 10 years like they were up here. So this is looking okay, but as you'll see when I show you the performance over this last week, it doesn't look that way. So how did treasuries look over the past week? Well, you can see here that they didn't look very good. They fell in general. In fact, they all fell for the week, with EDV, the purple line, the longest duration, highest risk treasuries falling the most, TLT, 20-year bonds, falling second most, and so on. So this is not a healthy looking treasury picture. What about over the last month? Again, not healthy. And what about year to date? Well, year to date, we are right at the bottom over the past year. So this is not a good looking treasury market, but could it represent an opportunity? These are really selling for a bargain here. And what if we look at 5 years? So if we look at 5 years, again, you can see that we're very close, not far off of this bottom back here on October 28th of 2022. So kind of at historic lows here. Maybe this is an opportunity to buy less risky assets. that have plenty of upside. Now, will they get back up to here where they were up almost 60%? Right now they're down 20%. That's like an 80% increase. Probably not, unless something bad happens and interest rates go to zero again. But hopefully that won't be the case. But look, even if they go from minus 20% to zero, that's a pretty good gain. So I think there's opportunity here over the longer term. And how does all of this show up in the buying and selling pressure for Treasuries? Well, let's take a look. For 1 to 3 year Treasuries, you can see that the price was declining. We had a nice rally here, but a more recent pullback. But you can see for shorter duration Treasuries, the buying pressure is nicely above the selling pressure here and has been increasing. So this shows me that there's a move from longer duration Treasuries to shorter ones right now. And you can see that in the declining prices that I just showed you a second ago. And then if we go to intermediate Treasuries, you can see falling. We had a little bit of a rally attempt here, but they've been declining. Selling pressure well above the buying pressure. For 7 to 10 year Treasuries, declining price, a little bit of a pop here, but again declining. Selling pressure above the buying pressure. And for long bonds, you can see they've kind of gone nowhere overall, and selling pressure above the buying pressure. So Treasuries are struggling right now, but like I said, they are very close to their long-term lows and may represent a buying opportunity going forward. And what about the inverted yield curve? Boy, I hope I get to a point where we don't even have to talk about this. As I always point out, it was inverted 1.1% or 110 basis points back here. Tried to have some sort of a recovery, never even got close to being uninverted. We went right back in the doldrums here, and now we're kind of bouncing around. So we're currently at a level that's better than it has been. We're 93 basis points or 0.93% inverted, which is not good. But look, it's going to take the Fed lowering rates and or long bond rates going higher for this to uninvert. I'd rather see the Fed lower rates than the other way, but we'll just have to wait and be patient, that's all. But what's interesting here, if we look at the Fed rate monitoring tool, right now the futures markets are saying there's an 80% chance that the next time the Fed meets on September 20th, that they'll leave rates unchanged. So maybe this is a sign of hope. But this can change a lot between now and September 20th. So I'll keep reporting on it every week, and we'll keep an eye on things. Yeah, what about gold? Yep. Well, those miners are not doing well here. We had a big decline in gold prices. We had a pop here when there was some talk about some Russian gold-backed currency. I don't know whatever happened with that. But you can see gold has really fallen off. And you can see that the selling pressure, while it's not really high here, is above the buying pressure. So I don't hold out much hope for gold right now, but we'll see what happens going forward. And how about Bitcoin and cryptos in general? Well, we had, again, a very nice rally here when Fidelity and BlackRock talked about launching Bitcoin ETFs. In fact, the buying pressure went off the roof. But then you can see since that time, we've really struggled, and they're basically kind of down here. And in fact, the selling pressure is well above the buying pressure. So I wouldn't be an investor here right now. At least not for the short term. For the long term, maybe, but not for the short term. So where are we? Well, this past week, stocks went up and Treasuries went down. Look, we could be in for a few weeks of non-committal behavior from the stock market until the retail investors and money managers get off their beaches and boats and get back into their offices in September. Until next week, I'm Calvin Rose, and thank you for watching Invest Smarter. That's all for now.
There's something brand new. You got me thinking it's you I'm missing. I've seen the world, but nothing's better than loving you, girl. I've been waiting time and time again. I've been searching, but nothing else will do. It's it's gotta be you. You got that fresh look, long curves. You got my head turning time and again. You got that something I need. You got me thinking it's you I'm missing. I've seen the world, but nothing's better than loving you, girl. I've been waiting time and time again. I've been searching, and nothing else will do. It's gotta be you. I've seen the world, but nothing's better than loving you, girl. I've been waiting time and time again. I've been searching, but nothing else will do. It's gotta be you. It's gotta be you.